All right. Good morning, everybody. I'm going to go over uh, some other material today, and I'm also going to review some of what we did the last couple of days. Yesterday, we were looking at this Aussie dollar, and the Aussie dollar was, I would say, right about here or so yesterday. And you guys can go back and look at the video somewhere in there, I think. And it was a solid black bar. And my intent, I talked about these tags or when we tap this 00, and I would look to get into this trade once price tags it. I wait for it to go up if it's going to go up, and then I'll try to catch a trade about 10 pips below the 00, targeting the other side, or taking a scalp on the assumption we're going to make a bottom wick. All right. So in this case, this tagged it and pulled back about 50 pips from its start. That would have been a great scalp. Now, I was not there to grab it, unfortunately. I was out taking care of some other stuff. Um, but you can see that particular setup I was talking about. You had an opportunity to see it actually unfold because this was a solid bar when it hit that 7,400. All right. Now we've tapped the 74 again, so we've got a double tap. Okay, similar to this double tap. All right, similar to this double tap where we have two candle wicks now have pierced this. We don't know where this candle is going to end up at the end of the day, but our thinking process would be, I want to move this over one notch. Oh, it doesn't. Okay, I'll do it this way. Uh, Come here, you. Ah, there we go. Our thinking process would be, I would like to see, to go long, I would like to see this candle close closer to its high than it does to its center. Okay? If this candle closes closer to its high than it does to its center, I will be looking to target a long trade back into the middle of this area or to this other 00. All right? To go short, there's not much here to look at the moment. But if I had to take a short trade, I would wait for this candle to close, hopefully somewhere near the 00, and then look for an opportunity to go short there. But right now, price is not exactly in the center between these two 00s, but it's not at an area that has a strong psychological meaning to the market. All right, so I need to see price come. I would like to see price come back down to this 00, perhaps close below it, and then I would look for a short trade. All right. The other pair that we had some interest in was the New Zealand dollar weekly. Let me minimize this. New Zealand dollar weekly. Uh, why is it not opening? Oh, because it's open up here. Ah, it's the wrong one. Shoot. Well, no, I can use this. Uh, we're starting to get a little bit of a green candle here on that New Zealand dollar weekly. Remember we counted these 10 candles down into this area?
Yeah.
Okay. We've got 11. Ideally, you'd like to see 13, but our RSI2 is starting to curl up. So I'd be looking for a little more confirmation on that, see where this daily candle closes. If this daily candle, let me open this, let's make this visible. I don't want to move these indicators. If this daily candle closes 50% into the body of this red candle, I would be looking for a long trade. And I'd be looking to go near the 50% level um, of this move down. Let's mark this again. Again, we don't know where this candle is going to close, okay? But I'm just saying if it were to close 50% into the body of this candle, I would be looking for a trade back into the area of the 50 or at the very least the 38. And from here, the 38 is about 400 pips away and the 50 is about 500 pips away. That's a very, very logical pullback. All right. even a pullback to the 23 is still 100 pips or so. Let me put my glasses on. That would help because I didn't actually see that number.
More than that, Lou.
Excuse me?
So I think you'll find it might be a bit more than that.
Oh, okay. Oh, yeah, very much so. Oh, almost 300 pips. Okay, so let's call it 250. So even to the 23, uh, it'll be 250 pips. So this is very good trade to keep an eye on. It's setting up nicely, just the way we'd like to see it. All right. So those are the two that we're looking at the moment. All right. Um, now I don't know which one of these. I'll do channels first. Oh, Mike is saying I took a long about 30 minutes ago. Now he's down, but hopeful. You took a long where, Mike? Nigel's offline. Ron is on the web. Handy is on the web. Oh, Mike, when you open up a GoToMeeting, uh, it usually opens up a web page. Am I correct in that, Mike? Handy?
Well, I've got the GoToMeeting saved in my favorites, so I just open it from there.
Okay, because I was playing with it this morning trying to sort that out, and there is a tab there that says download and run GoToMeeting, and you may be choosing to launch the web application and not actually download the actual GoToMeeting software.
Well,
So,
I just did it the way I've always done it.
right, no,
So
I got it. I understand that, but what happens is when you show up on my side, I don't know if you can see this or not. You see my attendees box,
no,
or you don't see it on the screen?
no.
Okay, so it probably grays itself out then. But what happens is next to your name in parentheses it says web. So it tells me you're using the web application, and as long as you are using the web application, I can't give you control of the mouse and keyboard.
Okay,
So
all
just
right.
keep that in mind,
I'll
you
probably
know,
need
or you might want to.
some tech help to do it properly then.
Well, yeah, well, you might want to go to GoToMeeting.com and download the actual application, and then we can try it again tomorrow.
All right. Okay.
All right. So what I want to touch on today is another way of trading longer term charts. Maybe I should go to a 1 hour. I'll go to a 4 hour. Leave it here. Is to trade channels. Okay. Now this can really be tricky for people. It would be in drawing the channels because some people would draw this as a channel. How do I want to duplicate this? Some people would draw this as a channel. Okay, and for all intents and purposes, they would be right. All right, and then you'd be looking to play a bounce off the bottom and the top. And as we know, when you're in a channel, which indicator is your best bet for confirmation? When you're in a channel,
Stochastics.
very good. I need to get that Jeopardy music so I can play it when I ask a question. Okay, so very good. So stochastics would be your best confirmation indicator in this case. All right. Now there's another channel here that can be drawn also, and they tend to. And I don't want to get too much into Morg theory, Timothy Morg and Gann and not squares of nine. I forget there's another term for it. But I'll show you another channel that could be drawn. That would be this one. Okay, you agree with that? We've got the right amount of touches. And again, I kind of split the difference, because it's the dominant closing price is much more important than where the wick went. All right. And we'd be looking to do the exact same thing here with a stochastic confirmation and with a trend line break. And I'll get to that shortly. All right. If you have a problem locating or properly drawing your channels, then what I would suggest is you make your chart a line chart. And now you can clearly see the peaks that you could draw something across. Do you see that? So here, this is much easier for many people to see. that, and then if you copy this down, you'll see you'll get the proper number of touches at the bottom like that. All right, you see that? That becomes much easier for many people to see by making it a line chart, and then you add your candles later.
I think the trouble is, Lou, well, certainly for me, there's a lot of subjectivity in where you actually put it. I mean, you could have put it one slightly above there, couldn't you?
Up here?
No, your bottom
Over
line
here.
your bottom line could have gone up a bit, couldn't it, to the bottoms of the bottoms of the candles on the left-hand side?
Wait, let me give you. That's Tony.
No, it's Mike. You can't
Oh,
give me control, Lou.
oh, damn! I
Look at
told you that, Mike. I told you that. I told you that.
yeah.
Okay, so you're saying I could have gone to the bottom of these candles?
No, go a bit left. Yeah, the bottom. No, back on your line.
Over here.
There, yeah.
I could have, yes, but what I look for in this area, and that's a good question, is technically, now the way I do it, okay, the way I do it, I look for the last dominant close along this trend line, and that would be this candle. And if I bring this down here, you'll see that the majority of these taps did not close below here. This
Yeah.
one did, but remember how do you judge a fake out?
By waiting for the next candle to show whether it's
And
inside or outside.
and
Yeah.
what did the next candle do?
Went back inside.
There you go. Okay. So, and I said that's what I personally like to look for because the wicks don't matter as much as that dominant closing price.
Yeah.
Same thing here with the high. Now you will see other guys do it other ways and they'll swear by it. I am not saying they're wrong. I'm saying that I found the tweak that works for me.
Yeah.
And that's what I'm showing you. Now we can go all the way out to the absolute, the way they do it in the textbook. Okay. The textbook would be like this for the most part. And I prefer
the
more,
bottom. Yeah.
I prefer this because with the stochastics, I can catch all of these.
Yeah.
And if I bring this down here to the last dominant close, and that would be this high, or this open of that black candle,
Yeah.
and you'll see none of the other candles on that perfectly straight line, nothing has been able to close above that line.
Yep.
So I don't profess to know the magic in that, but I do see that it works over and over and over again. And I try to be as respectful of human nature and Mother Nature as I can. All right, and I try to trade what's there and not what I want to see. You got me? What I want to see is a Norman Rockwell. You got me?
Yeah, not a Picasso, yeah.
Right, but what we get is Picasso.
Yeah.
Okay, so Mike Schumann said he went long on the Aussie dollar. Okay, we'll come back to that in a second. Now, let's get in. Now, I'm going to ask as many people as possible to draw some channels. Okay. Next, let's put our stochastics up here. Oscillators, stochastic, and I'm going to set it to the default for the moment. All right. Oh, and I should put my levels in, but yeah. Let me do this the right way. Let me put my levels in stochastic, and I had this set up for something else. Okay.
Change color.
You think?
Yeah.
Delete that, and I'm going to put the standard 80 and 20. 80 and 20. Okay. So, as you can see, when you draw this channel, this trade doesn't have a lot of emphasis to me because I don't have the stochastic at the extreme.
Yeah.
Got me? So if these candles get down below here and this stochastic stays at the extreme, then I'm willing to take a shot long. And my first profit target in this case would be the center of this, right in there.
Yeah.
All right. The overall long-term profit target would be a distance equal to the width of this channel, which would be about like that. I'm just guesstimating it. And the same thing would apply to the top.
Yeah.
Okay? Because generally when these break, they will go to one side or the other. Okay?
Yeah, you've got divergence supporting along there as well, haven't you?
Uh, uh, where on the chart?
The stochastics is sloping up. If you draw a line, and the
Oh, right
price is
here.
sloping down. Yeah.
Okay. Yeah, because there's so many of them, I don't know which one you're talking about. So stochastics is sloping up.
Yeah.
Um, yeah, that's kind of hidden divergence, and
Yeah.
the
Price is
price is
sloping
going down. All right. That happens to be a very good observation. Okay, and I generally look for it, but I usually look for it from two peaks. But that was a very good catch. Very, very good. All right. So now trading these, you'd like to keep as much simple confirmation as possible. And now, again, we don't have a live one to work with at the moment. Excuse me. But what we can do here is open this up. Simplest way to do this is with a trend line break at the extreme confirmed by a stochastic cross. So in this case, we would have a more traditional trend line. You want to catch like two bottoms. So you'd catch it in here like that.
Mm-hmm.
A bounce at the extreme with stochastics oversold and a confirmation. With stochastics overbought and a cross down for confirmation.
And
Same.
you wait for it to go below the 80 before you take it, or you don't.
I prefer that it's at the 80,
Yeah.
and if it's at the extreme, it's going down anyway.
Uh-huh.
If it's at that trend line, because remember, these trend lines tend to be obeyed. You
Yeah.
look at the bottom trend line, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times, 11 times. I mean, you know, how hard does your head have to be not to kind of, to pay attention to what the market's telling you? You follow me?
Yeah.
And all of these touches, by the way, did have a confirmation cross. Just to show you. You see that? So if it works like that all the time, why fight it? The big trick is just to wait until it gets oversold or overbought. And that's one of the easier ways to handle these. And then obviously you measure the width of your channel, and that's your profit target. In this case, it's 230 pips, and you're looking at the middle as your. Well, you can look at the middle as where you'd want to either split the trade or add into the trade. Okay, and then tomorrow I'm going to talk about. I'm going to stick with the grids and with the channels and wedges. There are several others. Maybe I'll do the inside bars today. I don't want to have too many systems because that can get a bit tricky too. Yeah, maybe I'll do an inside, a continuation trade. I call it. It really operates off of an inside bar. But uh, so when we start looking at stuff next week, we'll try to work in teams or whatever, so we can all try to catch some of these together. So this is relatively simple. Are there any questions about this? If you can't see the channel, turn your chart to a line chart. The peaks will make themselves very, very obvious, and then you can copy to the peaks. If this channel break, go ahead.
Hey, good morning. Question. So when the stochastics hits the 80, using it where you have your line and your line down here, that's your confirmation to kind of jump in.
Correct.
And then on the long side, at the end of the chart, what's the reverse? So I'm looking at the uptick, and it's again when it hits back at that line. But we've had.
Wait. Let me give you control. Okay, Andre, all yours.
Okay, what do I need to do? Oh, okay, I have it. So when we look on the long side here,
yes,
obviously this area and this next uptick look the same, but the price action here and the price action here obviously are not the same. So is there any indicators that allow you to say you can take this as a long because it has enough energy, blah, blah, blah?
I don't quite understand what you mean by the price action being different, and I don't quite understand your reference to the uptick.
Okay.
I want to make sure I understand the question.
Sure. So you see how the price is bouncing off of this channel?
Right, but at the time you take the trade, you don't know that that's what's going to happen.
Right, right. So when I look at this particular price action,
Yeah.
which was a successful bounce, and then I look at this one, which is almost a failed attempt or a fake out. This looks the same, right? It's both giving me an indication that, okay, it's time to go long here, and this one said it was time to go long here. So is there any other delta that you use to say, okay, this is enough strength, there's enough energy that, from volume, or you just took both and hoped for a successful,
Okay.
balance?
I take the trade based on the higher probability that prices are going to bounce and move up from this trend line with that confirmation. I don't know what the future is going to hold. That part is impossible for me to know, which is one reason why my first take profit is normally in the center of this channel. Let me just pull that in, put that in the center. And then let me just change this color so we understand that this is a profit point. That's why my first profit target will be here, because I don't know. The vast majority of the time, if you look, bounce went right to that center. Bounce went to the center.
Right.
Bounce went to the center.
Okay.
I'm playing highest probabilities.
Yep. Now I understand.
Now, also, keep in mind that a trade is not failed until your stop is hit. So when you get this crossover, okay, and you go long, you can go back to the last candle here, or the lowest candle in that group, and put your stop right below that lowest candle. We'd still be in this trade. Do you follow that, Andre?
Yep.
Okay. And our entry would be at the open of this candle, let's say, at the close of this candle, or the open of that one, whichever way you wanted to look at it. And that's what, about 40 pips so far, with the possibility for 50 and obviously 170 out all the way out to the other side.
Okay.
All right. The reason I don't take this trade, even though price has hit it's within a tick of the trend line, is that I don't have an oversold condition in my stochastic.
Makes sense.
Okay, so you just wait. You wait or move on to another pair. Or all right, one that's got more, one that has an easier process to see. Okay, makes sense? Oh, I don't want to delete that.
Crystal clear.
I did it anyway, didn't I? All right. Any questions on any of this before I move on?
Yeah, Lou, I have one if I may.
Sure. Let me. Is that Mike again?
Yeah, yeah.
Okay, go ahead.
I know for the purposes of this exercise you just used the default setting, but I mean, if this was one of your charts, would you have something other than 533, something a bit more sort of, I mean, smoother looking, or
okay. Good question. Very good question. I'll either use a 533 or an 833, and let me just change this to an 8, depending on how much volatility the pair has. Parameters. I'll make this an 8, and you'll see what I mean. Now now you see I lose that peak there, but on a pair that has a massive amount of movement, like the pound Aussie, or pound yen, or euro Aussie, the 833 works better. Okay. So it'll either be the 5 or 8, depending on and you can match it to the pair. You can see which one works better for you. The other thing that happens with a slightly slower stochastic is that these overbought and oversold areas hang around a lot longer. Okay, because here we went oversold right here.
Yeah.
And stayed, and didn't get across back above on the slow stochastic until the slow one is the red line till there.
Yeah.
Not much of a difference, but if you're just looking for this to be oversold, and then you read your candles, well, obviously this became a conditional candle. It closed more than 50% into the body of the prior candle.
Yeah.
Same thing with this one.
Yeah.
Same thing with this one, even though it's not a valid trade, but you get the premise. Same
Yeah.
thing with this one. Conditional candle, conditional candle,
Yeah.
conditional candle, conditional candle. See, these things happen in pairs, and they happen all the time, all over the chart.
Yeah.
Just a matter of just becoming accustomed to seeing it. Now, watch when I go back to the 5. You'll see that we get slightly sharper peaks. And now you see, instead of us being overbought this entire time, we actually had a dip in here.
Yeah.
Okay, and now our turnover short comes in a little bit faster. Okay.
Lou, you're waiting for both lines to get above the 20?
Yes. Ideally, you are. Yes. Now, sometimes you'll get the fast stochastical move first. Okay. As long as you are touching this extreme, this is good enough. You got me? As long as you're touching the extreme, and you've got that fast line is above the 80. I think I said that reversed a minute ago, but you get the idea.
Yeah, Lou, I was going to ask you. I wasn't here when you explained the 533 usage of the stochastic. So when you set up those numbers, what are you looking for?
Well, what do you mean? What am I looking for?
So with the stochastic, Mike, I believe it was Mike, was saying something about the 533 as far as the properties of it.
Oh no, he was asking me, do I use other numbers or other settings? If I was trading this, me personally, I'll either use the 5 or the 8.
Right.
833 or 533.
And by doing that, it gives it a tighter
The
lead.
5 gives you a tighter turn. And watch, I'll show you. Let me change the 5. Let me make all of them 3s, and you'll see what I mean. You'll get an even tighter turn. Okay, you see that? And look how fast the turn is now. This turn occurred before we even had a black candle. You see that?
Okay.
All right, but that's a little bit too tight for me. I really don't want to get faked out. I'd rather have a little more confirmation, because if I'm looking at a 240 pip run, I can wait 6, 7 pips for another candle. You know what I'm saying? I don't need to be right. I try to think like a girl when I trade, and don't spread this all over the internet now. But guys, yeah, guys, I don't know if it's because of the penis or the testosterone or whatever it is. We, in our brain, we need to be right. Girls want to get it right. That's why women traders tend to be better than men.
You're a sexist.
That's okay. I'm a lesbian too, so I may as well get it all out there now. So anyway, so I try to get it right more so than worry about the need to be right. My pocket gives me more pleasure than my ego. When when I have the not when we never really talked about affirmations. I'm just going to sidetrack for a second. It's important to have a list of trading affirmations that work for you. And when I say that, when we all talk about affirmations, we all think about that French doctor, Coulet. I can't think of his name, but he did miraculous work with his patients by having them say, every day in every way, I get better and better. And when his patients said that over and over, many of them had dramatic improvement in their health conditions. Could be psychosomatic, whatever, but it worked. Okay. Now, what I found in my own research about affirmations, I'm actually making an audio tape, a subliminal audio tape for day traders. It's a side project of mine.
Cool.
Yeah, and I'm using neuro-linguistic programming and binary audio beats underneath. If you know what binary audio beats are.
Wow, you're going heavy duty there, dude.
Excuse me?
So you're going heavy duty.
Oh, yeah. Well, if you're going to do it right. So, binary audio beats tune your mind to one frequency. So they'll play like 5 hertz per second in one ear and 15 in the other ear. The difference between the two is 10. Your brain will tend to lock in on 10. Your brain automatically subtracts the difference. And they found that there are certain frequencies that get you into different states of alpha and theta where you can learn and absorb material better. So I'm using that technology combined with affirmations and combined with neuro-linguistic programming.
Well,
So,
I don't want to get off too far, but where did you learn your NLP?
I took a few courses. I took a course from a guy in Manhattan who wasn't that great a teacher, but I got the gist of it. Then did quite a bit of reading of my own on the internet. Then took a course with a guy on the internet.
Not Chris Howard, was it?
Oh shoot, I'm on my new computer. I could tell you the guy's name and give you the whole course and all that, but it's on my other computer.
Okay, so just briefly and I won't get going too far off track on this, but NLP has only been around about 50 years, well, maybe a little bit longer than that, and it has somewhat of a tainted history. And what happens is people that learn it realize that they can use it to manipulate others, so you have to be careful who you're learning it from.
Oh, I completely agree, and I can see right through that. In part because one of the careers I wanted to go into many years ago was advertising. And one of the sub-courses I looked into was subliminal advertising and how they
Right.
structure things in ads with words and pictures to sort of pull you in a direction that you don't even realize.
Yeah.
You follow what I'm saying?
I do.
So that's something that I'm extremely aware of. But the aspect of of NLP that I'm using is how people hear the emphasis and accents on phrases. And I'll give you a sample quiz here. I'm going to make a statement. And the statement is, I didn't say he took the money. Could you repeat that, Mike or Daryl?
I didn't say he took the money.
Okay. Pick any one word in that sentence and then put emphasis on that word and say the sentence again.
Oh, I get you. Yeah.
Okay, I got you, yeah.
Okay, but say it out loud so you hear the premise.
I didn't say he took the money.
Now that changes the whole sentence completely.
Yeah.
Okay, pick another word.
I didn't say he took the money.
Okay, so that's complete. You had nothing to do with it, blah, blah, blah. You got me? So it changes the total. Now here's the key. People listen the same way that exercise is that I just gave you. So in my structuring my affirmations, I'll give you an example. One affirmation would be, I'm smart and trade consistently. So when I do the affirmations, the first time I run it through, each affirmation will be said the number of times that there are words in it. You follow me?
Yeah.
So the first time I would do the affirmation would be, I am smart and trade consistently. The second time I read it, it would be, I am smart and trade consistently. The third time I read it, it would be, I am smart and trade consistently. The fourth time I read it, I am smart and trade consistently. Did you see the difference, how each one makes a difference?
Yeah.
Did you hear that in my voice?
Yep.
Okay, so when I structure the affirmations, depending on what your audio acuity is, one of those is going to ring. Get me? And that's how I want to structure.
You say all different.
Yeah, exactly.
You say all different. You find the one that you like more.
And I don't know which one you like, but I'll put it out there all 5 ways, and the one that clicks to you will register. Now, because we go through different ups and downs in our biorhythms during the day, like in the morning, the I am smart, that one might register. Later in the day, when you're in a different psychological state, the one that says I am smart and trade consistently, that one might register later in the day because you're in a different mental state. So I may erase this whole part of it because I don't want anyone to steal this because I know this is going to be effective because I've experimented with this with a number of people. But that's something that I'm putting together.
Thank you.
Yeah,
It's
along
not
with
actually, it's not dissimilar to just normal language though, because the insertion or omission of a comma between words can also just change the complete sentence from from positive to negative, can't it?
yes. Now you may know that story. I think it was in France or England where the queen had a lover and the king found out about it, and the king was going to have the guards take the lover out someplace and have him killed or whatever. And the queen intercepted the letter and read it and put a comma in the letter, never changed anything else, just put a comma in the letter. And the guards took the guy to a private island where he was protected and gave him a large sum of money and left him alone. All because of a comma. And it's supposed to be a true story. And I've heard it a couple of times. So.
Is she looking for a boyfriend now?
I don't know. This is quite some time ago. She might not be a type now. Okay. So yeah, it is basic language, but it's how we use the language. That's the key. And everyone does, they all do these things in monotone, So anyway, when I was mentioning before that my pocket gives me more pleasure than my ego, is one of the things. I grew up poor, not because of my mother and father or anything like that. That was just the way it was. We didn't have a lot of money. I didn't particularly feel poor all the time, but I know one of the things that when I felt I made it, I always wanted to have what was called a knot, KNOT. And in my neighborhood, a lot of some of the thugs and gangsters and pimps and all that, they'd want to show off. They'd reach in their pocket and pull out this big fat knot of money with a rubber band around it. And to me, at that point in time in my life, I said, wow, he's got a lot of money. And I wanted to have that when I got older, but I didn't want to be a pimp or a drug dealer or whatever the hell they were into. You got me? So one of my affirmations is just the knot. And when I say the knot, I see that picture in my brain. You got me? That means something to me. So when you sit down and structure your own trading affirmations, what I would strongly suggest is use language and imagery that makes sense to you. Don't try to quote, get the right sentence like what someone would ask you as if it was a test on a question on a test. Pick something that means something to you, and then those affirmations will have so much more power than you can imagine. But just to say I will trade better every day, okay, it's kind of generic, okay. Or now like you could say my trades are slamming. If that language fits you, then that's your affirmation. So I didn't mean to sidetrack, and I will come back to this again because you guys are going to be guinea pigs for my for the MP3 when I have it done. All right.
Yeah, I volunteered.
Yeah. So my as I said, my pocket gives me more pleasure than my ego. I could think that I'm all who the fuck I am, but if I don't have any money in my pocket, well, gee. And I can say today I've got the knot, several of them. So,
without the stable.
It's now pluralized.
That's true. But I got the rubber band. I mean, I'm telling you, I got the whole thing, the rubber band. Well, I wish I was on my old computer. I would show you what my old rotating screensavers were, because I took pictures off the internet of knots of money, or bundles of money, and I put that in my rotating screensaver as another way of conditioning myself. When I was.
It's called a roll over here in England, Lou.
A roll? Oh, okay.
Yeah.
All right. So then, now see, for me, I would call it the Jelly Roll, because there was an old blues musician.
Jelly Roll. Yeah.
So I'd call it the Jelly Roll, and I would see myself as a guy with the hat on, strutting into the club with the knot in my pocket. But that would mean something. You get it?
Yeah.
That's what I want you to really lock in on. Pick something that really means something to you, and it makes no difference if no one else in the world understands it. Okay? So now if you ever hear me say I'm working on the knot, you know exactly where Lewis is coming from. I don't need any other thing to say except those two words.
Yeah. Yeah.
So, and that's what I mean. So pick something that means something to you. So, um, let me just get back to this. Okay, so this trade wouldn't be, this is kind of borderline because this is real close to that oversold, and we've got a conditional candle here. That is pretty close, but I would prefer that this candle touched the trend line, and this at least touched it a little bit more, but that's pretty close. All right, but I wouldn't take it. I wait to see what the other charts look like. If none of them look like anything, then this would be the best looking of the bunch. And then I would take this trade, and as you've seen me do in the live trades, I'd cut my lot size because I'm not 100%, thrilled with it. But it's close enough that it's worth a shot. So I'd cut my lot size down to like a quarter of a lot, let's say. All right, still make some money. It might not be big money, but it would still be some money. All right.
Yeah.
So let me delete these lines. Okay, good. And we'll stay with this particular pair for the moment. Do I have to open this up? And let's squeeze this in a little more. All right. Now let's make this a line chart again. And now, again, you can see where you could draw some, you can make a channel here out of this. And this is, again, this can be a bit subjective, but once you get used to doing this, you'll see that it has some power. That's really where that would go, but that's gone already. All right, and if I stretch this out, there's not much there. You had a nice one in here. All right, and this is what you do. You just look for these areas where you can draw these lines, turn your charts back into candles, and now you've got your bounces back and forward. Delete. Let's pick another pair, someone.
Aussie dollar.
Okay, let's look at Aussie.
The highlighted one.
No, that's Aussie CAD we're on. Okay. Okay, so, well, what's that?
Oh, do we pick the pair?
Someone picked Aussie dollar, but you can pick another one.
Euro dollar.
Euro dollar, we'll come back to that in a second. We'll do Aussie dollar first. Okay, so Aussie dollar right now, I don't see anything really clear on the 4 hour. I'll go out to a daily. Even the daily is gone. Let's make it a line chart. So I'm looking at where I could draw something tradable, and even the daily was gone because, as you can see, this would be the bottom.
Yeah, there's not much there, is there?
Right, and then you'd have the top. So you move on.
Yeah.
You got me?
Yeah.
But
that's a nice line you drew there.
what, this?
Yeah.
Oh, well, this is the only one you can draw.
Yeah.
Okay, so now nothing on the daily, so let's go down to the 1 hour and see if there's something on the 1 hour. And those are the 3 time frames that I checked.
Lou, with that daily,
Let me go back.
Couldn't you have made a channel from that first peak before it dropped off to the
right
to the
here,
last, from there and up?
From here and up?
Yeah, to the left. Yeah, to there. Couldn't that be a channel?
Well, we can't trade any of this. It's gone.
Oh yeah. Okay.
I'm looking at the most 2 current peaks, or as Tom DeMar called them, 2 most supply and demand zones. That would be this. Now you can make a channel here.
Right, but it's gone already.
Well, there's nothing until we get down to the bottom, but this is a downward channel, so this may just keep
Steep.
arching down. Could very well do that. But if I go to a 1 hour, though, we have something that may be tradable on a 1 hour. Let me delete this. Delete this. And now if we go to a 1 hour, now this is more in line with what you were talking about, Andre. I'll draw this from here to here. And then copy this across this way. And now we have a descending channel. Now I can put my candles in. And let's open this up a little bit. Let's go back to this channel and look at what we have. That's, boy, it's close again, but no, well, I could clean it up a little bit. The only thing I could do is I could bring it to this high right here. That's all I could do with that. See, that's the last dominant close right there. You got me? And
Yep.
we've got a trend line break here, so this could potentially be a short trade. I wish this were a little bit higher. So again, if I were to take this, I would take this with a smaller lot size. My goal target would be about the center of the box here. In this case, would be about 40 pips. All right, nothing to sneeze at. That's decent. And if it fakes out and breaks to the upside, then I know my upside potential is the width of the box. You got me? Same thing with my downside potential.
Yep.
All right.
Where would you put your stop on the short, Lou?
Always at the back of the highest candle.
Right. Okay.
All right. As long as that's within your risk parameter. Like if you're okay, you got it. All right. So it's those three charts that I look at will be the daily, the 4 hour, and the 1 hour. I do look at the weekly, but that's, you only look at that on Fridays. All right. So now euro dollar was the next one. Oh, let me make it a line chart. Line. Okay. Let's do this right there and bring this down here. Does everyone agree with this, what I'm drawing here?
Yep.
All right, I don't see anything else. And remember, when I say dominant peaks, these two peaks are higher in a way that it encapsulates all of these lower ones.
Yeah.
And these two peaks encapsulates all of these. So those are the dominants. So now when I put my candles back on, I can see right here, this was a fake out.
Yeah.
All right. And I had a little, well, no, I didn't really have a trade here at all. Only one I had here was down here. And I didn't really have an extreme. So this would be one of those trades I would take with a modest lot size because I've got conditional candle. I got the fake out. It came right back in, which tells me that it's going to keep going long. And then I would target the center of the box here. And that was about close to 60 pips. Take off 5, let's say 50 pips. Okay. Got it? But that's how you would do the channel. Now, if this breaks out, comes back and does a retest and does not close back inside this box, my target for this then would be out there. Make sense? With my first target being the center of the box. Got me? So this has to close above, retest, and not close back inside. And then I'm out. I'm looking for the center of the box. Okay, where I can either exit the trade completely or split the trade, move my stop loss up to lock in 20 or 30 pips. You know what I mean? So the worst thing that can happen, it pulls back and it pays me 20 pips. All right, so now what I'm going to do, I'm going to go to New Zealand yen. I'm going to start with the daily. And, well, there's nothing there, really. Look at these gaps. Unbelievable.
Yeah.
All right, so anyway, so there's nothing really clear to draw on the daily. We had something, many, many moons ago, as you can see, that was pretty obvious. Let's go to the 4 hours, see if there's something there. We've got a downward channel here. Let's just mark that. Let's make it a line chart so we can see our peaks. I would go from there to there. Okay. And bring this down to this peak here. I'd actually bring it here to this guy because I know this is a fake out candle. I've just done this enough times. See that? That was a fake out candle. Came right back in and conditional. I target the other side. And this is New Zealand yen, 70 pips to the other side and about 25 to the center of the box.
Lou, you want to change your stocks back to 5 again. That's why you're not seeing so many entries.
Oh, gee, yeah, I did that because of shit. You're right. Absolutely right. Yeah, there we go. Okay, so you see what I mean? We're oversold here. We're waiting for this to come back through, and then right in there we get our conditional candle long. It was a fake out. And by the way, let me go back to the line chart. When you do enough of these, I know that that's a fake out.
Yeah.
And I just from the minute I see it, that's a fake out. I know that candle, that was a wick, came back up and closed inside. So right now if we get candles to ride along this line, if the candles ride along here and this stochastic comes up to the oversold, I've got a potential for a short trade. But right now there's not much there. The only thing that could be there would be a breakout of that, and then I target the width of this box. You follow me? Breakout, retest, and then target the other side.
Yeah.
All right. And thank you for catching that stochastic thing.
It's a lot easier to figure out than bats and butterflies and all that.
Oh,
crap.
don't go on there.
Yeah, that just doesn't. And I'm not great with math anyway. And they start, no. I'm not saying it doesn't work. I really made an effort to study it, and I realized that what was funny, as I'm studying this, I'm walking right past wedges, ignoring price traps. There's money all over the table, and I'm busy for 9 hours trying to figure out this damn bat. So again, find what works for you. So let's go to the daily now. Daily, go ahead.
Do the channels you draw have to be absolutely like equidistant between the lines, or can you have channels which are, if you like, slightly wedgy shaped?
Yes.
Yeah.
Absolutely.
Uh-huh.
But then that goes into a wedge.
Yeah.
You know what I mean? So
Yeah.
and I'm looking.
I didn't mean like a proper wedge. I mean just one sort of slightly out.
Yes. No, you're 100. Well, this would be one here, and I'll show you. This is a good example of what you're talking about. So if I go here and I take these guys and draw them out there,
Yeah.
and if I wanted to draw I want to draw it there, and then do this. Now, if I want to draw the correct wedge, and this is technically a wedge, come on, I would bring this down like that. You get me? So as these lines move further into the future, they get closer together. That's still not a perfect example, but this is kind of what you're talking about.
Yeah. That's what I was talking
Right.
about. Yeah.
You could do that too. Yes.
Okay.
I prefer this type of wedge. And now I'm going to bring this down to here because guess what this is?
A fake out. Yeah.
Okay. So when we throw the candles in, see that? It closed outside the line. The next candle came right the fuck back. Pardon my Portuguese.
Right.
Oh my God.
Okay. And it went right back to the other side. 300 pips. Okay. And here we had a short trade here. We had our oversold. Okay. Here we may have gotten a fake out in here because we did have the oversold here. But again, your stop is going to be relative to your wedge size. So the stop is 130 pips. And you're looking at, you're still 2 to 1, almost 3 to 1.
Yeah.
Okay. So now what this is looking like it wants to do is break out to the upside because we're continuing to make higher lows here. So, you just drop a line outside and see if you get that, that signal, that setup. All right. Now that's the daily. Let's go down to a different time frame. We may see something else. And you check these 3 time frames. That was the daily. Let's go to H4. Now H4 presents a different look altogether. See that? Make this a line chart. Now H4, this is what you're speaking of. You would come in here like that and bring this here. Okay. And if I wanted to tighten this up, I'd go to this peak and this peak because I know those other ones are fake outs, but I'll just bring this out like that. And you see how this gives us a slightly different look.
Yeah.
Okay, there was a great trade there. Fake out in here, but now here, oh, this would have been another nice trade, but gone. Here we had that momentum candle.
Yeah.
Okay, it closed closer to its low than it did to its center. The odds are in your favor. It's going to go, the next candle will go in that direction also,
Yeah.
which it did. And in this case, it was a 150 pip move.
Yeah.
All right, you didn't have the stochastics, working with you on that. But when you see that kind of candle, that kind of situation, like here, that's a real high. That's just real high probability, especially at a level like that. Okay.
Yeah,
And now let's go.
was a good one as well. Yeah.
Yeah. Well, that's what happens with.
No wick on the top. Yeah.
Yeah. Now let's go down to the 1 hour now and see if that gives us a different look. And this takes a little bit of practice, so I'm not expecting everyone to get it right off the bat. But once you do, let me just do backspace. Once you do get it, it'll be easy to find the 1 or 2 pairs that have something obvious going on. All right, let's make it a line chart, and this is gone already. Because on the line chart here, a couple of ways you could have do it this way and copy down to here, but that's gone. Or you could come across here and bring this up to the top. What's that?
Breaky, breaky.
All right, let's just see. Okay, see what I mean?
Yeah.
You do enough of them, and they can't trick you. Okay.
And I know those fake breakouts there also happen on. I look at the candle that makes the breakout. So that's probably a news thing or something.
Could be, but and I wouldn't doubt it. But I'm not paying any attention to the time at the moment because I want you to get the concept of the pattern.
Yeah. I just make an observation. That's all.
Now here is a clean breakout. Let me close this. This is a clean breakout. We closed. The next candle did not come back in here. Got me?
Yep.
So now this has a potential. God damn it. This has a potential to go about this far, which is not unreasonable. I should bring this down a little bit more.
Yeah.
Actually, the way I do it is this is the way I actually do it. I draw the line like that and then copy the line out.
You ever use that, just use the equidistance channel?
Yeah, you could. Okay.
And
now,
that takes you, if it goes down there, it's going right back down into that
right in here.
Demand zone. Yeah.
Yeah. Now you see why this is a good demand zone?
Yeah, that's a very good demand.
Okay, look how fast we got the hell out of here. There's probably still a bunch of orders in here. And for this to go down there is not unusual at all. That I would not be surprised to see this drop here. And we had a close, real close. You know what I mean? Now here's where you kind of take some of your experience and add to it. This is a conditional candle. We tagged the extreme. It's right at the 80. I mean, it's, so you take it with a slightly smaller lot size. And again, to the bottom of the channel was 125 pips, and our stop was about 50. Okay, 50, let's say 60. All right. And as this progresses, you can always slide your stop up and get yourself out of danger as quickly as possible. But that's go ahead.
You always trade these on like the daily, the H4 or the H1. You never drill down to the lower time frames when you're doing this.
No, because for the risk, the money's not there.
The money's in the higher time frames, clearly. Yeah.
Yeah. So that's why now if I want to scalp, that's why I use totally different stuff on scalp because I need a little more information because of the noise.
Yeah.
This won't be as noisy because I'm only waiting for 1 or 2 hits here.
Yeah. Got you. Yeah.
You follow me?
Yep.
And now that we know this is broken out, I can play it now down to here. And when it gets down here, guess what I'd be looking for? An oversold stochastic.
Yeah.
To take me back up to the top again.
Yeah. Yeah.
All right.
Or at least in the middle. Yeah. Yeah.
Yeah. This is actually a pretty good example here. In fact, let me draw this and you'll see exactly what I mean. Bring this over. This would be the top. Okay, now watch. When we broke out of the top, that's about the equidistant right there.
Yeah.
Perfect.
And it came right back. Let me stretch this out. Came right back to the bottom, gave me the oversold, and went right back up again, possibly to a new high.
Yeah.
You follow what I'm saying? That's a perfect example of how these things work.
Yeah. Yeah.
Very good example. I'll show you another one here because I like to show several examples. That would be this. Copied down to here. And then, well, it broke out way much later. But once it broke out here, once it broke out in here, it came up to this level. So that one didn't really pan out the way I wanted it to. But you get the idea.
Yeah.
That's where these things tend to go.
Yeah.
Oh, if I just extend the lines, it actually did work.
Yeah. Absolutely. Yeah.
Yeah. That's why I didn't want to get too much into the whole GAN of 9 and all that other
So
nonsense.
we're getting close to the GAN square of 9 there.
Yeah, I know, because and I'm pretty good with it, but it creates more questions than I'm sometimes in the mood to answer because it can get real technical. But here we had the breakout. This was a fake. Here we had another breakout. What did the next candle do? It did not come back inside this channel. Now I know we're heading to the equidistant channel.
Yeah.
Okay, and I have the recorder on so you guys can watch this again because I do cover a lot of information. When I'm working one-on-one with someone, I take a little more time, but I'm trying to cover as much information as possible so when we get into this next week, we can work with it.
Yeah, that's really good.
I've been asked by a firm on Wall Street to come in and be their director of training. I don't know if I'm going to take it or not. But it's nice to be asked.
Don't forget about the hookers and the coke.
Well, no, that's all in the perk package.
Oh yeah, yeah.
Oh yeah, that's the fringe benefits.
The Wolf of Wall Street. Yeah.
Yeah, I don't know, more like the stray puppy of Wall Street at this point. I'm working all the wolf, but and you got to be humble and be honest with yourself. All right, so who wants to pick a pair and work down these three charts? Dennis.
Oh yes. Hey.
How are you today, Dennis?
Tired. I didn't sleep this night.
No excuses. You're here.
Muy bien.
You've got control. I want you to pick a pair and just practice doing the trend line as we just talked about.
Okay.
That pop-up was another one of Rob's inventions. That's a real nice one. I'm just trying to perfect a couple of things with it. It's called a pullback hunter. Go to current time because we can't trade yesterday. Very good. One more click. Okay. What do we have there?
Wow. Yeah, don't plan.
Remember, this is an exercise. Don't worry about right or wrong. Worry about the process. Just try the process.
Drawing a channel, or
we're drawing a channel. Where do you see you have a possible tradable channel? And again, I try to use the two most current swing points if possible. Okay, that was pretty good. I would have drawn something different, but you have the idea. Okay, so
Yeah.
that was pretty good. But you have the idea. Now, let me go back to a line chart. He picked these two. I would have gone out here like that. All right, and I would cut this one because I know that that's our friend.
Yeah.
That's Mr.
So
Fake Out.
pretty tight. It was
And
too tight.
yeah, and I would bring this down here. So I'd be targeting the bottom of this line at some point. Oh, that's the H1 we're on, okay? So I'd be looking for the price to go back up here and come back down there. So now if I throw in my candles, this is a fake out, and that's probably a fake out. Lo and behold, what do we have?
Fakey, fakey.
Yep, Mr. Fakey. All right, and the fake out normally will bring you back into the middle, both of them. All right, and this was a decent trade. So now this is a nice setup because now we can look for the bounce off the top, possibly the bounce off the bottom. And we caught the second triangle, which is nice too. If I extend this line out, and remember these things going in waves of, oh, I don't have my triangle thingy up. But you remember how many triangles?
5.
Okay. And we got 1, 2, 3. 1, 2, 3. So now we're waiting for a possible, what's going on here? Waiting for a possible third triangle here. Possible. But everything's got to line up first. So now having this, we can't get really tricked into anything. You got me? And if we took this fake out and it closed back inside after the close above, the fake out went back to the center, which was about 80 pips. See that? Just to the center alone. So you can see getting your 100 pips a week is not an impossible thing. You know, the same way we were able to get our 5%, our 5 pips or $50 or 1% per day. You know, once we stopped doing stupid shit, we were able to get that, you know, pretty consistently. You'll see the same thing's going to happen here. The thing here is that you pay a little bit more in time. A 5-minute chart, you generally wait 15, 20 minutes, you got something going on. Here, you may have to wait 15, 20 hours. But what you make per hour is dramatically better.
Yeah.
I was going to go into one other. Maybe I'll go into the other one tomorrow. I want you guys to practice this a little bit while I'm here. Let's see. Let's do Aussie, New Zealand, and Nigel. I see you hiding back there. Are you alive, Nigel?
Mm-hmm.
Okay, do you want to try this? Nigel? I don't know if he's saying anything or not. Is he typing? No. Offer by Bear Stearns? Oh, no. Nigel? Okay, let's just move on. Phil, how's life treating you, Phil?
Pretty good.
All right, you want to give this a shot?
Yeah. Just drawing a channel.
Yeah, just draw a channel.
Yeah, sure.
Oh, yeah, I have to give you control. Hang on. Okay, all yours.
All right. Yeah. There you
Make it a line chart first.
go. Oh, okay.
Yeah, I mean, it's you're correct. No, leave it. Yeah, make it a line chart.
All right.
And everybody knows you hold down the control button. That's exactly
Why did I
it.
do that?
That's exactly it. What was that?
I said, I wondered how you did that.
Yeah, you you make it hot, then hold down the control button.
Uh,
Okay, that was excellent. Now draw your extensions.
okay. My field extensions?
No. The using the width of the channel.
Oh, okay, yeah.
Yeah, you can eyeball it, or any other.
You want me to make it exact?
That's pretty good. Yeah. Don't put those two diamonds on top of each other there, because it'll screw you around when you're trying to move one.
Like that?
See? All right, that's good. So now you've got a decent game plan. If this breakout continues and we don't get a close back in the channel, this side of the channel is the target. The middle of the channel could be a good take profit point. Okay. So that all worked out very, very well. That was well done. And here we had our short sell right here, short sell. And here we had another one right here. And here we had the momentum candle. The momentum candle closed closer to its low than it did to its center. Doesn't matter what color the candle body is, by the way.
Yeah.
Okay. But the odds are the next candle is going that way. Now, there's different names for this in the other candlestick books, and I'm not saying it's the wrong name. I'm just saying make trading fit you like a glove. I like to call it a momentum candle because that's what I see happen every time I see one of those. Got me? The momentum shifts. And it happened right at the peak, which is good. And we've got 1, 2, 3, 4, and that was our fifth triangle right there. And let me just do this just for the sake of the tape. 1, 2, ugly ass triangle, but a triangle nevertheless. 3, 4, and the last one was right here. 5 and out. We hope. All right, that was good. So now let me backspace. Now, Phil, let's do the same thing, but this time go down to the 4-hour and see what the 4-hour looks like. And keep in mind, when you go to the lower time frame on the 4-hour, you get 4 times as many candles. And when you go to the 1-hour compared to the daily, you get 24 times the candles. So what would you draw here now? Make it a line chart.
Okay.
And you know why you make it a line chart? The other thing is that you're not looking at candles. Because as soon as you look at candles, you're trying to figure out the candles. And all you want to do is figure out the movement. So what would you draw here that's currently tradable?
I mean, the only thing I really see is like kind of like that. Maybe like.
Yeah. Now, you're doing the equidistant there?
I'm not exactly sure what I'm doing right now. I'm just kind of feeling it out.
Okay. And there are a couple of options here.
Yeah, I'm not exactly too sure.
Okay. This was pretty good. Okay, because you've got a nice peak here. And let me throw the candles in. Because I kind of know what the candles look like just from having done this. You've got this strong resistance down here. You've got an oversold, so you could have a nice bounce from here back to the top.
Yeah.
All right, that looks good. Okay, I don't see anything wrong with that. And you got a little momentum candle here possibly. All right, close closer to its high than it did to its center. We're already 4 candles deep in this downtrend. So that looks like it has potential. Okay, I like that. The other line you could have done, I'll leave these on. The other thing you could have done, I'll go back to the line chart, is this. Like that. And across here. And now I'll throw the candles back in. And you can see we're bouncing off this bottom of this trend line right where this one is. So this is pretty good confluence that we could get a nice pop back up to the top. And now that this is in, I can straighten this out a little bit. Come up, this is the last dominant close right here. Okay, so the distance from this side to that side is about 50 pips. All right, it's not bad. Okay, so those are 2 ideas on the same chart. When if you come across a situation like this, that gives this point a lot more power. Let's clean this up. All right, let's go down to the 1 hour then, Phil. Mike said he tried an Aussie dollar short. We'll come look at the Aussie dollar before I wrap up. All right. I like that.
All right, do you want me to draw on the extensions?
Sure. Okay, excellent. Very, very well done. And you see we had a nice bounce here off the bottom. We had a tap. We were oversold. Long entry could go right here, right out to the back, 60 pips possibly to the top. Well, keep in mind, it'll hit it over here somewhere.
Yeah.
So from here to there, it'll be more like 35, 40 pips, unless this thing just rockets straight up. But that's not bad either. Now, keep in mind, because we're in a downward channel, most of your momentum is going to be short. So the best trade would be a bounce off the top line. A scalp will be a bounce off the bottom back to the middle. You got me? When you're in a downward channel, you want to jump on this one. That's where you want to put your heavier lot size. If you get a bounce, you want your bounce to go back to the middle and take a smaller risk. Got me? The aggressive entry would be the minute this big candle touches that outside trend and you're oversold. That's aggressive. You go in right there with your stop right below that wick, like we saw on that Aussie dollar daily chart. You follow me? That would be your aggressive entry. That was very well done, Phil.
Would you state the aggressive entry again?
An aggressive entry would be when you get a solid candle that comes all the way down and touches this bottom line.
Mm-hmm.
If you want to take an aggressive scalp, you enter right when we touch that line and put your stop a couple of ticks below the wick there. Well, there won't be a wick because you're entering, so you want to put your stop a couple of ticks below this line.
Yeah.
Got me? And I usually like to use, on these higher time frames, I like to use 15 pip stop. Okay.
Yeah,
So,
you could do a lot of those.
Yeah, well, and then this was a 30 pip move.
Mm-hmm.
Take off 5 pips for the spread because this is Aussie New Zealand, so I know it's got to have a slightly higher spread. But you can do this, yes. When you get up here, all of these become aggressive entries. But remember, these are with the trend, so there's no need to be over aggressive. You can wait a little bit and get your confirmation. But when you're in a down channel and you get this bounce, you see right there? that would be an aggressive entry heading back to the center. And so would any of these. This is the one you want. This is the one you want. You got me? Because you want a solid candle to come all the way down. This was at one point a solid candle when it touched here.
Mm-hmm.
And the candle itself came all the way back about 20 pips, I bet. Okay, 30 pips. Got me? You don't want like these little guys like this. Like you don't want these guys. What you want to see is a long candle that made the trip all the way on its own, because usually there's not going to be much left at the end of it, and it will want to turn around. Okay. Now I want to take a look at the Aussie dollar that Mike was talking about, and he said he took a short.
About 4 days too late, I'm afraid.
Oh wait, we have the Aussie dollar down here. Oh, did I must have erased it. Oh no, here it is. Aussie dollar daily. Okay, I don't know why he took a short.
Earlier you had shown a channel, I think, on an hourly that was a good short, and I tried it too, because I didn't do very good on the long, so I figured when you showed the short one, I would try it, and that didn't do it either.
Okay, I didn't see what you would. You said we did an Aussie dollar channel before?
Yeah.
It was a daily chart?
No, I think it was an hourly.
I just want to see what you did.
You had drawn the channel on there, and I had my stop right above. Actually, I had my stop right at that previous high, and it got tagged. Yeah.
Let me just get this all set up. And I'll put that there. Right there. This we assume is a fake out. All right. Let's make candles. Okay. And you would go in short here. I would have gone short here.
Yep. That's
Yeah,
what I did.
no, nothing wrong with that. I would have gone short here. You're not going to win every single trade, trust me.
No.
But that met enough of my rules, and the trade isn't over yet. You got me now. I might have been popped here too. Yeah, I would have had a 15 pip stop. And that's the other thing I have to mention. My stops tend to be very, very, very tight because I can live with 2, 3 trades that don't pan out in a row. That won't disturb me anymore. It used to completely rattle my cage, but it doesn't anymore. If you're more comfortable with a longer stop, you can go to the prior high. But if you go to the longer stop, adjust your lot size accordingly. So if the trade doesn't work out, you still lose the same amount of dollars. Did you understand
Yeah,
what
mine
I'm
was
saying?
right at that prior high there, and it got tagged, I think because of the spread. It only got hit by about 1 pip, but it was enough to get me out.
Oh, okay. But I would have certainly taken this trade. No question about it. We only have, we got what, 1, 2, 3, 4, 5. Well, we got the 5 triangles. But I would have taken this. That's got all the right look. 4 candles in a row. You got a little bit of a pin bar here. But again, my stops tend to be tight, and I should mention that over and over and over again, because many people are more comfortable going out here with the 40 pip stop.
Oh my.
Yeah, I'm just not. That's just me.
Yeah, I start to lose nerve at about 20, so
Well, that's because your lot size is too big for your account. You should never have a bead of sweat run down the crack of your ass when you take a trade. Trust me. When that bead of sweat starts rolling
Hey,
down,
Mike, what about your first trade?
your lot size is too big.
I took a loss on the first trade too for, I think the first one was minus 16 pips.
Yeah, but you said you were long on that first trade. What
Yep.
was your entry on that?
This 18 EMA, I tried it when it closed above the 18 EMA, and I tried to go long and got stopped out there too. It closed down underneath the 18 EMA, It went lower by, I was down about 25 pips for a minute there, and then it came back up, and I got out at minus 16, I think it was.
Okay. We'll try to look at your charts tomorrow so we can get a better beat on what it was you did. But I just want to reiterate, if you want to do the traditional stop, go to your last swing high, because you'll notice that once you get the channel drawn, these highs don't get taken out. You see that? I just prefer if I have to go out this far. So if I'm using a 15 pip stop, 15 pip stop would have done the same thing. The spread would have got me.
That's what got me.
Yeah, see where the spread is? The spread would have certainly got me there. Okay, so that makes sense. But if I have to double it and go out to like a 30 pip stop, then whatever my lot size was at 15, I cut it in half and then go to the 30. So as
I
far
only
as
had one
dollars
micro lot on. I can cut it in half, but then I end up with, a half a micro lot to go in is pretty small.
well, again, you're practicing the process so that
Yep.
when you get the process right, when you get a larger account, you'll know what to do with it.
I'm
You
working
follow me?
on it.
And again, just to show you something, you see we have the overbought here, and we've got our trend line break. That's an entry. We don't have the overbought here. You see that? But we do have the conditional candle.
Oh, wait, we have an,
I
right there.
prefer that the
We
stochastic
have an
is,
overbought with the trend line break, but it didn't break there.
let me give you control, Mike, so I can see what you're telling me about. Go ahead.
Here's the overbought down here.
You have the mouse, Mike.
Yeah, well, you have an overbought right here.
Yeah.
So you would want to sell there.
No.
By the time we
No,
sold
no,
it up here, it was no longer overbought. Now it's almost oversold.
No. You want the trend line break. You want the trend line break, Mike. You got me? Now, these two didn't line up. What lined up was this. This peak right here lined up perfectly. But I would take this trade because I do have my trend line, my stochastic is broken already, and it's going short. So I would absolutely take this, and I'm in a down market. That I would absolutely take in a heartbeat. You got me? Many, many times these things line up perfectly. Sometimes they may be off by a candle or two.
And the other thing there is, Lou, is when the stochastics is overbought there, the candle's in the middle of the channel. It's not at the extreme, is it?
Right.
So you
Right.
don't take the trade, do you?
Yeah, well, if you're going to sniper, if you mark this candle, go to a lower time frame, you do have an entry. But I'm not getting into the snipers at the moment.
Yeah.
But I'll just show you that. Let's go down to a 15, and if we find that marker, there, you see.
Yeah.
Now you've got the setup. I just didn't want to over confuse it with everything else.
Yeah.
But when you start approaching that line, and it's a fake out,
Yeah.
which telling me it's heading to the middle. You get me? So I'm trying to keep it like one thing at a time. But you're absolutely correct. So I see all this stuff, but when you're teaching it's I want you to get the process first, because then if I say do a sniper, I don't have to teach you what a sniper is. If you follow me?
Yeah.
Because we've covered it enough times. So that's why I kind of put things in the order that I put them.
So would you try to short it again here if it closes back in the channel?
Yep. I would. You're right. I want to see it get down, below this low. Like if you wanted a little extra confirmation, let it get, below this low right here. It's another way of doing it.
Yeah.
But we're in a downward trend, and like I said, you got popped by the spread. That doesn't mean you did anything wrong. And again, I have to reiterate, I tend to use tight stops. All right. I'm not afraid of a couple of trades not panning out in a row. That doesn't freak me out. And if I have to use a wider stop than normal, I will cut my lot size down accordingly to make it match.
Yeah.
So, all right. So then what we're going to do tomorrow is, because I want to show a few different things, because everyone will see something differently. This is I'm just going to do a quick 2-minute preview of it. Indicators, trend, and I'll use the old school moving average. They used to use a 21. Okay. So now, and daily. So now what this is very quickly is when we close below the 21, what we start doing is putting pending orders on either side of the prior candle. And we want our bias to be in the direction of the 21. So when this candle closed right here, this let me open this up. And there are more rules than the ones I'm going to give you now, or subtleties I should call it. So when this candle closes, we have a pending order to go short right there. That trade doesn't kick in for 1, 2, 3 days. You got me? When it does kick in, your stop goes out to the top of the candle that got you in or to the last swing high, whichever is more comfortable for you. All right, now you're in this trade and then you can do projections. You can do a lot of ways to create your profit targets. If you missed that trade that day, then the next day, as long as you're below the 21, you want to put a pending order below this candle. Let's say you missed this, or for whatever the reason is. Now your pending order is below this candle, and your pending order is below this candle. Then your pending order is below this candle. Did you follow me on that?
Yeah.
All right, and we'll get into the subtleties of that later. The other version of this is to take any pin bar or inside bar and only put your stops below those, your entries. So in this case, this is a one candle pause. You'd put a short entry here. This pinish or small candle or spinning top, you'd put an entry here. So you'd end up entering this candle sometime during the middle of the day. You won't be around.
Yeah.
That's the beauty of this. Okay. You'd put an entry order short below this guy right here. See? And then you're off to work. Come back. Hey, I got popped into a trade. What do you know? You'd put an entry order below this guy right here. An entry order below this one. Not necessarily the large one, but I'm showing you a couple of variations. And we'll get into some of the subtleties of this tomorrow. But it's another way of doing it. Like if you've got a day job, you know what I mean? And you can only look at the chart like an hour a day when you come home or whatever. This is a way of setting yourself up for trades the next day. Okay?
Yeah, inside bar in direction of trend.
Well, inside bar or spinning tops or moderate candles, medium-sized candles like that. Like you don't want to do it on the extreme because look at where your stop would have to go.
Yeah, absolutely. Yeah.
Yeah, but you want to be in the direction of the. Now this is the simple version, is in the direction of the 21.
Yeah.
You know, there are versions that are a touch more complicated, and we'll touch on this, and then those will be the 4 systems that we'll start looking for and we'll start working with the goal starting next Tuesday of 100 pips a week.
Yeah.
All right. So I'll go over this again, and you know, this is the end of day trade. Now you're going to hear that phrase. Everyone's got some kind of end of day system. This is what Uncle Lou calls his end of day trade. All right. And I will see you guys tomorrow. If any questions or thoughts or whatever, you know, pop them in the Skype chat. I may make a new Skype chat because I cannot add people for some reason, and I just don't know how to do it, or I don't know where to find a link to give it to them to join. And that's because I didn't make that chat room up. Someone else made that chat room. So I may keep the same name, or it may be step by step 1 or whatever. I don't know yet. I'll figure that out. All right. So just keep that in mind. But I'll add all you guys to the new Skype once it's done. Okay. I will see you guys in the morning. Go ahead.
Yeah. Thanks, Lou. Great lesson.
Okay. No problem. Talk to you later.
All right, thanks, Luke.
And the video will be up in a couple of hours.
Yeah, send the overflow hookers this way, all right?
Will do. Okay. All right. Take it easy.